In today's video, we are going to be looking at a complete guide to trend line trading strategy. In this video, you are going to learn everything about trend line. With this strategy, you can be able to make money consistently in the forex market. So many traders are using trend line as their major trading strategy, and that is what I'm going to cover in today's video. So my advice to you guys is to make sure that you watch this video from the beginning to the end so that you will understand everything you need to know about trend line. Trend line is a line drawn on a chart that helps us to identify support and resistance level. Trend line is drawn during a trending market, right? So this strategy works during a trending market and not during a ranging market, right? So you need to understand a market structure before you can know which strategy that you want to implement, right? So this trend line is only used during a trending market. It can be in an uptrend or in a downtrend, right? So you know that when a price is making an uptrend, the price normally makes higher high and higher low, and when the price is making a downtrend, the price normally makes lower high and lower low, right? So the trend line will now help you to identify major support and resistance level during a trending market. So in this video, you are going to learn how to draw a trend line very well and how to trade this strategy profitably. So trend line is one of the most versatile tools in trading. Like I said, so many traders are using it to make money in the forex market. So any trader can use trend line strategy, be that person a day trader, a swing trader, or a position trader. So this trend line strategy can be used in any time frame, right? It can be used in any time frame. But if you want to get a good result, then you need to use the trend line at a higher time frame, right? You need to draw the trend line using a higher time frame, and after that you can now go to a lower time frame to place your trade, right? So let's say you are a day trader, right? You can go to the 1 hour time frame or the 4 hour time frame and search for a trending market. You can look for any market. Any market can be gold, it can be Euro USD, it can be GBP USD. Just search for any pair that you know is trending, right? Then what you will do is, if it is an uptrend, then you need to look at the lows, right? Because when the market is in an uptrend, it tends to make higher high and higher low. So if the market is in an uptrend, you use the trend line to connect the lows and extend it to the future. So what you need to form a trend line is just two lows. So if you get a two lows and connect your trend line, then you have a perfect trend line. So what you need to draw a trend line is just two lows, right? So once you draw the trend line, then you now wait for the price to come back to the trend line for you to take your trade. And bear in mind that we have two kinds of trend line, right? We have the upward trend line and a downward trend line. So upward trend line is when the market is heading up and the trend line is pointing up, right? We call that one upward trend line because the market is going up. Then we have the downward trend line. The downward trend line is when the market is going down and the trend line is pointing down. So we call it the downward trend line. And you know that horizontal line is used to dictate major support and resistance level, right, during a ranging market, just as trend line is used to detect support and resistance level during a trending market. But if you can be able to catch a support and resistance level at a horizontal level and it could collide with trend line, then you can get a sniper entry. So what makes a trend line different from a normal horizontal support and resistance level is that trend line is slopey, right? Trend line is slopey. It's something that is drawn like this, right? And it needs to be adjusted because sometimes the price can break through the trend line and then continue going up. Let's assume the price is in an uptrend, right? The price can break through the trend line, that is fake breakout, and then continue heading up. So it is now left for you to adjust your trend line, right? So trend line is something that can be adjusted, but horizontal line for support and resistance level cannot be adjusted. It's something that you just draw and leave it there. But trend line, you need to be adjusting it as market is making more moves. You need to be adjusting the trend line so that it can fit very well, right? So not to waste much of your time, we are going to go straight to the screen so that I will show you how this strategy works, right? So that you understand what a trend line is and how you can be able to trade it profitably. Now, if you watch clearly on the chart, right? If you watch clearly on the chart, this is what I'm talking about, right? Now you can see that the market is clearly in an uptrend, right? And then we'll have the trend line connecting the lows, right? So whenever price makes a pullback to the trend line, that is when you are expected to place a buy trade. Then we also have the horizontal support and resistance level, right? You can clearly see that the price went up here, got rejected, right? Came back here, got rejected. So we now have what we call the horizontal support and resistance level, right? Because the horizontal support and resistance level is holding onto the level, right? So once you are able to identify this horizontal support and resistance level, and you also identify a trend line, and when price comes to the trend line, it gives you a higher probability trading setup. Like now, this is a horizontal line that dictates that this is clearly a resistance level, right? And you know that when price breaks above the resistance level, that resistance level tends to become what? A support level. So now that you have identified the resistance level, you now draw a trend line connecting the lows of the trend, right? So what you are waiting for is price to make a pullback to the trend line for you to be able to place a trade. Now you can watch that we have the first low and the second low. So once you connect the first low and the second low, you can now extend the trend line to the future, right? So what you are waiting for the price to make a pullback to the trend line for you to take your trade. So if you see that if you watch clearly, you see that the price makes a pullback to the trend line, then you now place a buy trade, right? And if the price now makes a pullback again to the trend line, right, we also have the horizontal support and resistance line here, and we also have a trend line here. So if a price makes a pullback here, you have every reason to place a buy trade. The reason is because we have a clean support and resistance line here, right? It was formerly a resistance level, and later it now becomes a support level because the price has broken above it. So once price comes back to this level, you place a buy trade. So you can clearly see how the trend line works. As simple as that. Then we also have the bounce and the break, right? We have two types of trend line. We have the bounce and the break. The bounce is for reversal, while the break is for breakout. So if you are trading the bounce, you need to watch the market structure, right? So if the market is clearly in an uptrend, what you are waiting for is a rejection, right? You need to wait to see a rejection candlestick pattern. So if you are trading a bounce, you need to wait for a rejection candlestick pattern. Now if the market is in an uptrend and the price makes a pullback to the trend line, right? So when the price gets to the trend line, you need to wait to see a rejection, something like a hammer, right, to be formed at that trend line for you to be able to place a buy trade. So that is what we call the bounce, because when the price comes to the trend line, it gets rejected, it bounces off. Whenever it comes to the trend line, it bounces off. That's what we call it, the bounce. So you need just first a candlestick pattern for this strategy. You need a bullish engulfing, you need a hammer, you need a shooting star, and you need a bearish engulfing pattern. So these are just the candlestick pattern that you need to be able to trade this strategy profitably. Now let me show you an example of what I'm talking about so that you understand it very well. So now watch this chart very well. Now you can clearly see that the market is in an uptrend, right? The market is clearly in an uptrend, making higher high and higher low, higher high and higher low. So now what you do is use your trend line to connect the lows, right? You connect the first and the second low and extend it to the future, right? Like I said, you just need two lows for you to be able to connect a trend line. This is the first low and this is the second low. So once you're able to connect these two lows, you can now extend the trend line to the future. So you're now waiting for price to make a pullback to the trend line for you to take action. So now you can clearly see that price makes a pullback to the trend line, got rejected. you can see that the price makes a pullback to the trend line and then ended up in a hammer. This is it here, got rejected. So this is what we call a hammer. A hammer is a candlestick pattern, right? So you can see that the price went up all the way to this point, then makes a pullback to the trend line, and what happened? The price got rejected. So now what you need to do is, once this hammer has formed, you wait for the hammer to close, the candlestick that formed this hammer to close, for you to place a buy trade, and your stop loss should be below the trend line, right? You can clearly see the price went up all the way to this resistance level and then got rejected, only to come back to the trend line, right? So if you had a target profit of previous resistance level, let's assume when the price got here, right, you are waiting for the price to make a pullback to the trend line. So when the price now makes a pullback to the trend line and got rejected, forming this hammer, you can simply place a buy trade at the close of this hammer, and your stop loss will be below the trend line. Then you can simply target the previous high, right, which is this, the previous resistance level. So you can clearly see that the price now went up, smash your take profit, and then return back. So you have already cashed out your profit, and then when the price return back again, comes down to the trend line and get rejected again. You can see that the price came to the trend line, got rejected again. You can see this long wick. So you can simply place another buy trade, and your stop loss will be below the trend line, right? And you can see that the trend now went up all the way to this point, right? And then what happened? It came back again to the trend line, right? Now you can clearly see that when the price got to the trend line, it got rejected again, forming this hammer. So a hammer is a reversal candlestick pattern. So once the price makes a pullback to the trend line and then ended up with a rejection, right, you simply wait for the candlestick that caused the rejection to close for you to place a buy trade, right? So this is what we call a hammer. So whenever price makes a pullback to the trend line, don't rush to buy. If the market is in an uptrend and the price makes a pullback to the trend line, don't rush to buy, because you don't know whether if that trend line is going to be broken, right? Remember, you are trading the bounce, not the breakout. You are trading the bounce, right? So you are trading in the direction of the trend. The trend is up, right? You are trading in the direction of the trend. So you need to wait to confirm that the uptrend is still in existence. The uptrend is still moving for you to be able to follow, right? So that is why it is advisable that you wait patiently for a rejection candlestick to be formed at the trend line for you to be able to place your trade. So if you watch, you see that we now have another Confluence, which is the horizontal support and resistance level, right? So if you watch, this is a resistance level where price couldn't break above before, right? You can clearly see the price went to this level, got rejected, came back to the level again, got rejected, and finally broke above the level, only to come back to test the level again. So you can clearly see that this is a powerful high probability setup, because we have the trend line and we have the horizontal line, both forming the support and resistance level. So now you can clearly see that when the price now comes back to test both the trend line and the horizontal line, it gives you a higher probability trading setup, telling you that there is no way that this price can break below the trend line, right? Because you have two confluence. And another one is the candlestick pattern. So once the candlestick pattern is formed, which is the hammer, you now have higher probability setup that the price cannot break below the trend line. So like I said, you need to wait for this hammer to close for you to place a buy trade, and then your stop loss can be below the trend line, right? Then you can clearly see the price went up, came back again to test the trend line, and then continue going up. So this is how you trade the trend line, right? So you need to watch for a trending market, right? A trending market that is making higher high and higher low for an uptrend, or a trending market that is making lower high and lower low for a downtrend. Then you can now use the trend line to connect the lows if the market is in an uptrend, or connect the highs if the market is in a downtrend, right? So this is how simple you trade using the trend line. Now if you watch clearly, you can clearly see that the market is in a downtrend. The market is in a downtrend, making lower high and lower low, lower high and lower low, lower high and lower low. So what you have to do is to use the trend line to connect the highs. You can clearly see that the trend line is used to connect the highs, but what you need is just two highs two swing high. So once you get two swing high, you can now connect your trend line to it and extend it to the future. So whenever price makes a pullback to the trend line, you wait for a rejection candlestick pattern and then you place a trade. The reason why you need to wait for a rejection candlestick pattern is to make sure that the trend is still in progress, because if a rejection candlestick pattern is formed, it gives you a higher confirmation that the trend is still in progress. Like now, you can clearly see that the price came to the trend line, and what happened? It got rejected with this candle. This is what called the bearish engulfing pattern, because the red is taller than the green, right? So once you see this type of pattern, you place a sell trade. You know that the trend is still in progress, right? The same thing applicable to this one. The price came close to the trend line and got rejected. You can see this long red candle telling you that the downtrend is still in progress, right? The same thing applicable here. The price went close to the trend line and got rejected, right? So you need to wait for a rejection candlestick pattern for you to confirm that the trend is still in progress. Now, if you watch here, you see that what happened here is that the trend, what happened here is that the price came back to the trend line, and then what happened? It broke above the trend line and a new trend began, right? Because there was no rejection here. You can clearly see that it was all green, 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 green. So there was no rejection here. So you can clearly see that this is clearly a reversal, right? So the reversal traders are the ones that are watching for breakout. So this is what we call a breakout, right? So if you are able to target your entry somewhere here, right, once you connect the trend line and you are able to get your target entry somewhere here, right, if you want to cash more pips, that is, if you want to make more money, you can simply hold on to your trade. Let's assume this is where you got the pullback, right, and you place a sell trade and your stop loss above the trend line. It is advisable that you exercise patience, hold on to your trade, and wait till this trend line is broken. By doing so, you are going to have a powerful, higher risk reward ratio, because you are going to ride all this massive trend. Let's assume this is a daily time frame, right? Let's assume this is a daily time frame, and you are able to pinpoint that the market is in a downtrend, and you're able to use a trend line to connect the highs of the trend and then extend it to the future, right? So when the price now makes a pullback to the trend line, once the price makes a pullback to the trend line, you simply go to a lower time frame, like the 15-minute time frame, and wait for several rejections, or you can wait for a crossover, a moving average crossover at the 15-minute time frame. So once you see a rejection of upper move at the lower time frame, you can now place a sell trade at the lower time frame. The essence of using the lower time frame is to have a tighter stop loss, right? Because with the lower time frame, you will know the highest point where the market is going to reverse from, right? So once you grab the highest point where the market is going to reverse from, you place your trade at that highest point, then your stop loss will be very close to your entering, right? That is where you see some traders risking just 10 pips to make 500 pips. You see some traders risking just 20 pips to make 1000 pips. That is the risk reward we are talking about, right? So the essence of this is to make your trend line at the higher time frame and then make your entry at the lower time frame. Like I said, you can use the daily time frame to pinpoint the movement of the market, and then use the daily time frame to draw a trend line. So when the price makes a pullback at the daily time frame to the trend line, you simply go to the lower time frame and wait for rejection, right? So once the price got rejected at the lower time frame, you simply place a sell trade so that you get a tighter stop loss, right? So this is how you trade the trend line bounce. Now let's talk about the trend line break. The trend line break is a breakout, right, of the trend, right? You know that when a price breaks above the trend line, it means a new trend has begun. Let's assume that the market is clearly in a downtrend, right? And the market has been respecting the trend line, meaning that the downtrend is still in progress, right? So the sellers are still holding onto their trade because the down move is still in progress. So what the breakout traders are waiting for is for the price to break above the trend line. For the fact that the price is still respecting the trend line, breakout traders will still exercise patience and be waiting, right? While the bounce traders will be enjoying their their pips, their profit. So what happened is this: when the price now breaks above the trend line, the sellers will quickly take their profit while the buyers will enter. So this is how it works. So you can clearly see that here the market was previously in a down move, making lower high and lower low, lower high and lower low, right? So you can clearly see that the trend line has already been connected at the highs. So whenever price makes a pullback to the trend line, you simply wait for a rejection to confirm that the trend line is still in progress. So once the price makes a pullback to the trend line, you wait for a rejection candlestick pattern and then you place a sell trade. So when the price makes a pullback again to the trend line, you wait for a rejection candlestick pattern and then you place a sell trade. I hope you understand what I'm talking about. So now what happened here is when the price now got to the trend line, the price now broke above the trend line, right? So when price now breaks above the trend line, the price now makes what? A pullback to the trend line. So in the process of price making a pullback to the trend line, the sellers have already taken their profit. So there is no longer selling pressure in the market, right? Because when the price broke above the trend line, the sellers started taking their profits. They know fully well that the price have changed direction, and since the price has broke above the trend line, the price have changed direction, so they will start taking their profit. So that is why you see that the price will now make a pullback to the trend line when it discovered that there's no longer a strong selling momentum in the market. The buyers have stepped in, because once a trend line is broken, the breakout traders will enter, which is the buyers. They will enter and they start placing buy trade, buy trade, buy trade, and before you know it, the market will now reverse from the pullback and then start going up. You see how the market works. So that is why trend line, what you need is just the bounce and the breakout. These are the two things you need. So if you want to trade at the bounce, you need to look for candlestick pattern, like the reversal candlestick pattern. Like I said, we have the hammer, we have the shooting star, we have the bullish engulfing pattern, and we have the bearish engulfing pattern. So these are the candlestick pattern you should be looking at the trend line when the market is moving down or moving up, right? So you are waiting for the bounce. So whenever price makes a pullback to the trend line, you wait for this candlestick pattern to form for you to place a sell trade if the market is in a downtrend. The same thing applicable for an up move. If the market is in an uptrend and you connect your trend line, when the market makes a pullback to the trend line, you need to wait for a bullish engulfing pattern or a hammer to be formed at the trend line for you to continue with the uptrend. But if the price eventually breaks above or breaks below the trend line, it means that the market have changed direction. So if the market is previously in a downtrend and broke above the trend line, the sellers have become weak. They will take their profit and the buyers will step in. But if the market is clearly in an uptrend and then breaks below a trend line, it means the buyers are weak and they're going to take their profit, and the seller will step in and push the price down. So this is how you trade the bounce and the breakout. So for you to be able to trade a trend line strategy extremely well, let me just make a rewind. For you to be able to trade a trend line strategy very well, one, you need to understand the market condition. You need to understand the structure of the market. Is it in an uptrend, downtrend, or ranging? If it's in an uptrend or downtrend, you are good to go with a trend line strategy. But if it is just ranging, stay away from the market, right? So you need to search different market to look for a market that is trending up or trending down. Then you now use the trend line to connect the lows if the market is in an uptrend, or connect the highs if the market is in a downtrend, right? And then if you are a bounce trader, you want to trade off the bounce, you wait for a pullback to the trend line, and then you wait for a candlestick pattern to be formed at the trend line before you place your trade. But if you are a breakout trader, you need to wait for the price to break below or above the trend line. So if the price breaks above the trend line, you place a buy trade, and if the price breaks below the trend line, you place a sell trade. So this is how you trade using the trend line strategy. So if you are able to master this trend line strategy, you don't need to stress yourself again saying you are looking for a strategy. With this trend line strategy, you can be able to make money consistently in the forex market. So the secret is this: listen attentively, listen attentively. The secret is this. Now just look at this chart very well now. This is the secret. If you notice that the price is making higher high and higher low, right? you confirm that the market is in an uptrend. Now what you do is go to a higher time frame, like daily time frame, and look for a market that is trending, making higher high and higher low, higher high and higher low. Then what you do is use a trend line and connect the lows and extend it to the future. Then once you have done that in a daily time frame, you have to exercise patience, because this is a daily time frame, right? You have to exercise patience and wait for the price to make a pullback to the trend line. So if the price makes a pullback to the trend line, and let's assume this is the price, and the price now makes a pullback, right? Let's say the price makes a higher high and then makes a higher low, makes another higher high and then makes a higher low. Now you use a trend line and connect the lows and extend it to the future, right? Now you are waiting for the price to make a pullback to the trend line. Now if the price eventually makes a pullback to the trend line, right, and the price, this is a daily time frame, right, and the price makes a pullback to the trend line. Once the price is somewhere here, and this is the trend line, the price is here, simply rush to the lower time frame, like the 15-minute time frame or the 5-minute time frame, and then what you're waiting for is a crossover, right? So once the price is here, go to a lower time frame and wait for crossover. So if you see a crossover, a moving average crossover at the 15-minute time frame, that gives you a confirmation that the trend have reversed, right? Then you can wait for the price to cross over the moving average and close for you to place a buy trade. With this strategy, you can be able to make a higher risk reward ratio, because your stop loss will be below the trend line and your take profit will be somewhere here, or you can hold on to your trade until the price breaks below the trend line. So once the price breaks below the trend line, you can simply take your profit and place a sell trade, because the trend have changed direction. So my advice for you guys is to go to a demo account, backtest this trend line strategy very well. Make sure you thoroughly backtest it very well on a demo account, right? And if the strategy is working for you perfectly well, you can then use it in your real account. So ladies and gentlemen, that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Bye.